What's up, guys? Ndemazeah Godlove here. Today we are breaking down CFDs versus futures. CFDs trading versus futures trading, or in simpler terms, Forex trading versus futures trading. Two powerful trading instruments so that you can know which one is best for you. If you've ever been confused about which one to trade, this video is for you. By the end of the video, you know what each of them stands for, the major differences, the pros and the cons, and which one suits your trading goals. This video is in collaboration with Hola Prime, which is the #1 prop firm in the USA now. And the reason why this video is in collaboration with Hola Prime is because they offer both CFDs and futures at the same time. So to even dive on the video, let's just go on the Hola Prime website and I'll just quickly show you guys what I mean. So if you can see here, we have the beautiful looking and sleek design website for Hola Prime. Hola Prime is one of my recommended prop firms. If you can check the review I made about them, they have one of the best spread, they will have one of the best trading conditions. So if you didn't watch that video, the full video I made, almost about 25 minutes, doing a detailed video or a detailed review about Hola Prime, just click the link above to watch that particular video. But yes, it's an awesome prop firm in the space, and they offer both Forex and futures. And if you want to get funded with them, you can always check the link on the video description. Use the code on your screen to get an awesome discount at checkout, up to 50% discount at checkout. Now, on their website, you can see here it says Forex and futures. So if you're someone who trades, Forex just stands for CFDs. If you're someone who is interested in CFDs, at the end of the video, after watching this video and knowing the differences between CFDs and futures, or Forex and futures, if you choose to trade CFDs, you just come here and click on Forex. If you choose to go with futures, you just come here and you click on futures. So I'm going to help you to break down everything so that you know exactly which one to choose at the end of the day. So let's dive into CFDs versus futures, or Forex versus futures, so that you know which one, the pros, the cons, the differences, the challenges, the liquidity, everything. Like I said, I'm going to break down everything so that at the end of the day, when you're coming back to this website, you know exactly which one to choose based on your style of trading, based on your trading goals, and also based on your CFD. So let's just start with CFD. So what is a CFD? CFD stands for contract for difference. Contract for difference. Then CFDs is just a plural for CFD. So when you are trading CFDs, you are trading the price movement of an asset, not the asset itself. So anytime you are trading Great Britain Pound USD, XAU USD in CFDs market, you are just trading the price difference, not the asset itself. You don't own the gold, you don't own the physical. If I come here and I'm trading Great Britain Pound, let me just show you guys an example on physical. I have almost all currency pairs in my office. So let's just say I'm trading, for example, let's just say I'm trading Great Britain Pound versus the United States dollar. If I'm trading it in CFDs, I'm actually just trading the differential in price. I'm actually just trading the price differences. I don't own the Great Britain Pound USD, or I don't own the gold, or I don't own the Great Britain Pound, or I don't own the United States dollar. If I'm trading gold, I'm only trading the price difference of gold, and I don't actually own the gold. That's called CFD, contract for difference, or CFDs, contract for differences. So that's what a CFD stands for. You are only trading the price movement of an asset, not the asset itself. It is available in Forex indices, Forex like Great Britain Pound USD, USD JPY, Great Britain Pound JPY, AUD CAD, and all of that, right? So it's available. It's available in Forex. It's available in indices like US 30, US 100, Nasdaq, US 500, German 40, which is beginning to be one of my best in this index to trade, and then stocks like maybe Apple, Alphabet, and all of that. Commodities like gold is a commodity. If you guys don't know, commodities like gold, XAU USD, silver, XAE EUR, and then you also have palladium. So those are all commodities, and you can also trade CFDs under commodity. You can even trade CFDs Or you can even trade crypto as well under CFDs. Crypto like BTC USD, ETH USD, Cash USD. Those are all contract for differences, because you don't actually own the crypto, right? You don't actually own the crypto, you don't actually own the Bitcoin, you don't actually own the Ethereum, but you are trading it as a CFD, as a contract for a difference. So that's what a CFD stands for, or CFD stands for. You don't own the actual asset. So what are some of the futures? You trade them via brokers. For example, if you're looking for a recommended broker, you can always check the link on the video description and you see my recommended brokers. So you need a physical broker that is going to bring the prices to you. Remember, for CFDs, you don't own the asset. You're merely just trading the contract for differences. You're merely just trading the prices and you don't own the asset. So you need a broker that can bring those prices to you. You need a broker that can bring the quote. We call it in trading, or they call it in trading, the quote. You need a broker that can actually bring those quotes to you. So CFDs are traded via brokers. No expiry date. CFDs don't have any expiry date. You can hold them as long as you want. I have on this screenshot, these are actually some trades I took. You can see one is on NASDAQ and then the other 3 or 4 are on EuroCAD. I'm trading this under CFDs. We're going to come to futures, don't worry. I'm trading this under CFDs, and I've been holding this trade for more than 4 months, for more than 5 months to even begin with. So the only thing that I'm suffering here is just what they call swap, because I'm paying a lot for swap. But I can hold this as long as I'm making profit. I can hold this as long as I want, because for CFDs, there is no expiry date. You can hold the asset as long, or you can hold the instrument. Let me call the instrument. You can hold the instrument as long as you want within the broker limit. And for the broker I'm using for IC market, I can hold it as long as I want. I can do swing trading. I can do position trading. So leverage is commonly offered. So in CFDs, you'll find them offering you a lot of leverage. Maybe 1:50, 1:100, 1:500, or even 1:1000 and above for some crazily very high brokers. Number 3, another key feature of CFDs is spread based. So when you're trading with CFDs brokers, what you pay is a spread or a commission. So it's either spread based and or, that's what I'm saying, spread based and or commission based. All right, so that's another key feature. So an example of a CFD, like I mentioned earlier, is XAUUSD, which is gold. So most of you guys trade on CFDs without even knowing you guys are trading on CFDs. So an example is an instrument like gold. So CFD profit, so you only profit if a price moves. If the price goes up, then you make money without actually even owning gold. You're only just trading the contract for difference. You're only just trading the price. You're only just speculating on the price with no expiry date. You never own the physical gold, just the price difference. Right? So that's that for CFDs and their examples. Now let's talk about what are futures. I know you've heard about, most futures are very common for USA trader, because in USA there was a time they had an issue with MetaTrader 5 and they started running to futures a lot. All right, so futures are very common to USA and Canadian traders, but it is beginning to be embraced globally. So what are futures? Should you go with futures? Let's start with what is future trading. All right, what is futures trading? So futures is simple. It just stands for a legal contract to buy and sell an asset at a future date at a set price. So that's why it's called futures. Futures is not just called futures because maybe the name is short to call. No, in the future. That's why it's called the futures market or futures trading. It's a legal contract or legal contracts to buy and sell an asset at a future price, at a future price and date, at a future price and date. All right, at a future price and date. All right. So most of you guys who trade maybe like NQ, I'm going to come to all those assets. Just know you are trading a legal contract. You are speculating, or you are trading a legal contract to buy and sell an asset at a future date at a set price. So that's the difference. Why? Remember, for CFD, it's a contract for difference. You don't own the asset. It has no expiry date. You're not buying it or speculating at any future date and it doesn't expire. But for futures, as you're going to see, it has an expiry date where after the date that particular asset or that particular instrument expires. All right. So that's what futures stands for, and it's traded on regulated exchanges like CME, like NYMEX. And don't worry, when we come down to prop trading, if we are trading like Hola Prime or other prop firm that offers futures trading, what they do is they take the prices or they take the liquidity from this top futures firm or these top futures exchanges, regulated exchanges like CME, NYMX, and then they bring it to you through maybe Ninja Trader or maybe a block trade. There are many other futures exchange or futures brokers that take the liquidity from regulated exchanges like maybe CME. So what Ninja Trader will do, or what Hola Prime will do, is they will take the liquidity from, say, for example, CME, and then they bring it to you through maybe Ninja Trader. Then you trading it through Ninja Trader, and what you are trading through Ninja Trader and calling it futures is just a legal contract to buy and sell an asset at a futures date at a set price. All right, so it's used in commodities, indices, Forex, cryptos, etc. So just as CFDs are trade, you can also trade Forex, crypto, indices, commodities, and all the other ones. The same thing for futures. You can also trade commodities, indices, futures, Forex, and crypto. Key futures. What are some of the key futures? You already know the key futures for CFDs. What are some of the key futures for futures? All right, because it's good for you to know the differences between the key futures for CFDs, key futures for futures, so that you know which one better suit your trading goals. Standardized contract with expiry date. So one reason some people prefer futures is just their standardization, right? It's just their standardization and regulation. It's standardized and it's also regularized. So it's standardized and also regulated. So standardized contract with expiry date, e.g. monthly, yearly, maybe quarterly, or maybe after every 10 years. It just depends on the exchange that is giving you the particular future, or it just depends on the prop firm you're trading with. Maybe they even give weekly. You see maybe NCure for August. You will see NCure for first quarter of August. Meaning after the first quarter of August, that instrument is going to disappear. If you want to trade it again, you need to go on your broker and you search for another NCure. NCure just stands for NASDAQ, right? So you see NCure for August. It means at the end of August, for example now, if you are trading with futures and you go on your futures broker, you normally see the NCure August. It means that's for August. By the end of August, that asset is going to expire. If you want to trade NCure again, you need to go and search another NCure for that particular month. So if you're in September and you want to trade again in September, you need to go and search NCure for September before you can trade, because it actually has an expiry date. Another key feature of futures, it sounds funny, right? But yeah, it is what it is. Another key feature of futures is high liquidity. So futures are highly liquid than CFDs. Another key feature, centralized pricing. Remember, you are trading it through centralized exchanges or regulated exchanges. So the price is more centralized and not broker manipulated like some CFDs. What is common between CFDs and futures is that some CFDs brokers can manipulate your price. Some CFDs brokers are manipulated, so they can actually manipulate the price you are seeing. I'm not saying all, but some of them, they have the power. They can manipulate the pricing you are seeing, because some of them are not centralized, some of them are not regulated. But for futures exchanges or futures brokers, they all centralized and they are regulated. So there is less possibility of you having your price manipulated or you going through manipulation when it comes to trading with futures. Then it requires margin, but with lower leverage as compared to CFD. So if you are going for, for futures trading, it requires a lot of margin. It means you need to have a reasonable amount of capital. All right, that's if you are trading it as an individual. But for a prop firm will bring that capital for you and also leverage it. Prof firm will give you the capital and leverage it so that with small amount of money, say $100 or $200, you can buy maybe $150,000 futures trading. They call it the EVAs, all right? They call it the EVA. You can buy 150K futures EVA, all right? Example, you can buy a NASDAQ in futures. It's called NQ. So you can buy NQ futures contract for December, or since we're in August, you can buy NQ futures for August. So at that point in time, you're agreeing to take a position till or unless close earlier. So you are agreeing to take a position on NQ to the end of August or unless close earlier, or unless you close it earlier. So it actually has an expiry date. It's not just one of those assets like CFDs, where I just showed you guys an example on CFDs where this particular trade, I've been holding it for more than 4 months and I'm up with almost $150,000 because it's a swing trade, and I've been documenting this whole trade on my social media platform on the whole progress. This wouldn't be possible if I was doing it with futures, because it's obviously going to have an expiry date and I'll need to close the trade again, come and open new ones and stuff like that. So for futures, it has an expiry date, and if you're buying NQ futures contract for August delivery, then you are agreeing to take a position till then or unless you close it earlier. Now, let's talk about what are some of the differences between futures and CFDs, or CFDs and futures, so that you can better know if you should stick with CFDs or migrate to futures. So ownership with CFDs, you don't own the real asset. You are just trading the contract for difference. You are just trading the price. You are just speculating the price. You don't actually own the asset. If I'm trading Great Britain Pound, USD, these two currency pairs, I don't own them. I'm just trading them online. I'm just trading the contract for difference. I'm just speculating on the price. So that's called CFDs. Then for futures, yes, it's a legal obligation slash a contract. It's a legal obligation slash a contract for an asset at a future, that's why it's called a futures, at a future expiry date at a set price. Number two, expiry date. There's no expiry date with CFDs, but with futures, it has a fixed expiry date. The regulation, brokers are regulated, exchanges are also regulated. But some brokers can still get entry into the industry. Some CFDs, brokers can still get entry into the CFD space without being regulated, but almost all futures exchanges are regulated and they're more standardized. Cost structure, spread plus commission. So when you're trading with CFDs, you trade with spread slash commission, while for futures is commission plus exchange fee. So you pay a small fee for that particular exchange, and there are no spread. There are no spread for futures. That's still another good thing with futures, because immediately you get into the trade, you are already in profit right from the onset, because there are no spreads in futures. Then liquidity depends on the broker. So some broker will be able to get liquidity from tier 1. We call them tier 1 liquidity. They'll be able to get you tier 1 liquidity. So at that point in time, they'll be able to have stable or high liquidity. We all make money if the market is liquid. Then futures exchanges, they have very high liquidity because number one, they also standardized. Almost all of them are regulated. So as a result of that, their liquidity is also very, very high. Leverage. So the leverage for CFD is very, very high. 1:50 up to 1:2000 sometimes. Yeah, 1:50 up to 1:2000 sometimes. While for futures, it's moderate. It's normally 1:10 to 1:20. That's why in USA, most regulatory bodies in USA only allows the trading of futures, because the leverage is very, very small, 1:10 or up to 1:20. Minimum capital, low entry. You can even start trading CFDs with as little as $10, as little as $10. But with futures, you need, if you are trading on a personal basis, you need big capital, because number one, the leverage is even small. But if I'm trading with CFDs and I have $100 and the prof firm is giving, or the prof firm or the broker is giving me a leverage of 1:1000, it means my $100 is going to be multiplied by 1000, and I'll be trading like someone who is having $1000. So that's why I said the entry level or the minimum capital for CFDs very, very small as opposed to the futures market. Let's talk about accessibility. Who can access it? How easy can you access CFDs as opposed to futures? Easy via MT4, MT5. So you can easily trade CFDs via MetaTrader 4, MetaTrader 5, or maybe through DX Trade, through maybe a Match Trader, Trade Locker. So the entry, the accessibility is very, very easy. The most common is MT4 and MT5. All right. Why for futures, it requires futures account. It requires futures account, and those futures account can be created maybe through your futures pro firm that is providing you that futures account, like Hola Prime, and then you trade it through popular brokers like Ninja Trader, CM Trader, CMX, and all of that. Slippage / manipulation. That's what you guys have all been waiting for. For futures or for CFD, there's a possibility, all right? There's a possibility for manipulation in CFD, because I already told you guys there are some brokers that can get access in the space without any regulation. So at that point in time, there's a possibility they can manipulate your position. But in futures, it is rare. It is rare because it is more transparent, and almost 100% of all futures exchanges / brokers are regulated. So it's very, very rare. Manipulation is very, I'm not saying it's not possible, but it's very, very rare with futures trading or with futures brokers. All right. So that's the main. Those are the main differences between CFDs and futures. Let's go now into the pros and cons of both, because for you to be able to know if you should choose CFDs or futures, you need to know the pros of trading CFDs and the cons of trading CFDs. The pros of trading futures and the cons of trading futures. Let's start with CFDs. What are some of the pros of trading CFDs? You have low capital to start. You can start as little as $10 or as little as $100, as I explained earlier. And you can also trade it through prop firms, which as little as maybe $100, you can purchase a $10,000 account. So low capital to start. Number two is more asset variety, all right? More asset availability or more asset variety. You can have variety to trade many assets, many Forex currency pairs. You can trade many cryptos, you can trade many stocks, you can trade many indices, you can trade many commodities, metals, even agricultural products, a lot and a lot. So there's a variety of assets you can trade with CFDs. Then a simple execution via MT4 and MT5. Very, very simple. That's the simplest. You can actually learn about CFDs, and in the next 10 minutes, you are already placing your first trade. Yeah? You can learn about CFDs, and the next 10 minutes, you are already placing your first trade, because it is very simple for you to execute with CFDs. As just go on your method, go on your Play Store or your App Store and just type MT5. You'll be able to download the app. Open it. Once you download it, it's already coming with a demo account already. Open it and you already see the buy and sell button is there. If you press buy and your speculation is correct, remember for CFDs, it's a contract for difference. You are only just speculating on that price movement, and you don't actually own that instrument or that asset. So you just go there and speculate and press buy or sell, or press buy and the market goes up. You're already making money. All right, that's a demo account. You won't actually get the money. You won't actually get paid for that money. But if it was real money and then you deposit real money, you are already making money in less than 10 minutes. You see, you download the app and you're already trading. It's easy. As opposed to now, futures trading, where you need to start going through Ninja Trader. You need to link up the account. You need to download the feed. The worst is when I used to trade with Top Step. With Top Step, you need to download another platform for the feed. You need to download another platform for getting your prices, another one for executing your trade. And then even when you download Ninja Trader, it's very, very cumbersome. It's very, very cumbersome. The broker itself, you can have about 10 tabs open on your computer just for Ninja Trader alone. This tab is showing this one. So it's very, 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 very intimidating for beginners. Ninja Trader or futures trading is very, very intimidating for beginners, as opposed to CFDs, where you can just pump MetaTrader 5, you're already placing those trades. Flexibility, no expiry date. I just showed you guys my swing trade where I'm up $150,000. And the good thing is I've been taking the whole of my audience on platforms like Instagram and TikTok on this particular trade. When I took it in April, I was like, I'm going in on this trade. Donald Trump has just been nominated as a president, and this is what I'm seeing on this particular asset. This is why I'm going to be buying NASDAQ for almost the rest of 2025. I updated my community and I took this trade. So I wouldn't be able to hold this trade for this long if it was a futures, if I was trading with futures, because futures is having an expiry date. Now, there's nothing that has pros without cons. Let's talk about some cons trading with CFDs, trading with contract for differences. Broker price manipulation risks, that's the most feared in the industry, because I said some brokers can actually get entry into the industry without any regulation. So at that point in time, the broker price manipulation is at risk, and yes, they can actually manipulate your position. If you're looking for brokers that there's likely a slight possibility that they're not going to be able to manipulate your position, or the regulated brokers, check the links on the video description to sign up with my recommended brokers. Another cons of trading with CFDs is overnight swap / fees. I just mentioned that the reason why, the only thing I'm crying on this my position, even though I'm up with almost $150,000, the only cry I'm having, I was supposed to be up $170,000 or $80,000 on this same trade, but the only cry I'm having is swap. That's the only cry. The only cry I'm having on this particular trade is swap. Because if I can just zoom in a little bit, just on NASDAQ alone, I've already paid almost or more than $10,000 on swap alone. So what is swap? Swap is the interest you pay for every overnight position in CFDs. You don't have swap when it comes to futures, but for CFDs, swap is an interest you paid when any trade you open goes over the night. So if it goes from one day to another, you pay that particular interest on that particular position, and it's only available in CFDs. But who cares? I'm up $150,000. It would have been $170,000, $180,000, but it is what it is. Since just the pro that I can hold this trade for months or years without anyone telling me that it has expired, as opposed to futures, I'm going to continue holding it, and I'm going to continue trading with that CFD account. Then another con with trading with CFDs is less regulations, or less regulated than futures. CFDs are less regulated than futures. It's easy to get entry. You can just find one social media guru or one Forex influencer just going to open a Forex broker and boom, saying I'm having a Forex broker and I'm offering CFDs. You see, it was easy. He's not even regulated, but he's offering you CFDs to trade. So there's less regulation in the space, which has led to high risks of price manipulation. Let's go to futures and we'll talk about the pros and cons of futures. The first pro of trading futures, in the future, you're speculating on the future price of it's a legal contract where you're speculating on the future price of an asset at a specific expiry time. First feature or first pro of trading with futures is highly regulated and transparent. Futures are highly regulated, and almost 100% of all future exchanges are very standardized, they're very regulated, and they're very transparent. Number two is extreme liquidity. So with this extreme standardization and liquidity and transparency, it has also resulted to high liquidity. Remember, the higher the volume, sometimes the higher the liquidity. So many big investors, many big traders that trade with millions and billions, they prefer to trade with futures sometimes. Better suited for institutional or pro traders. Remember, you can see that's what I just mentioned. So it's better suited for institutional and pro traders. No spread, just bid and ask. There's no spread, meaning when you get into the trade, there's a possibility you can already start making money because there are no spreads with futures. The cons of trading with futures is higher minimum capital requirement. You can't just start trading futures with your $100, with your $10, as opposed to CFDs. So you need higher minimum capital requirements to trade with futures. Expiry date, the rule over required. So that's what I personally don't like with futures, is it has an expiry date. For example, this is the month of August, and I say if you're trading with NQ August with Nasdaq for futures is known as NQ. So if you're trading with NQ August, and then by the end of August, you need to roll it over. You need to roll over that position to September or close the position. So that's what I personally don't like with futures. Then the learning curve for futures is very, very high, and it's very, very complex. That's the reality. Futures trading, just the platform itself, a ninja trader is gonna just intimidate you. It's just so complex and intimidating for no reason, as opposed to CFDs where boom, just a MetaTrader 5 buy and sell button is there. You can easily move things around and done. So those are the cons of trading with futures. Now, which one suits you as a trader? Which one suits you as a trader, as a CFD or as a future? So which one should you go for? That's a question. Which one should you go for? Choose CFDs if, remember I'm going to put it this way, choose CFDs if, and then choose futures if. So I'm going to, my audience now, almost about 800,000 subscribers on YouTube. Most of my audience are trading CFDs, and some of my audience are trading futures. So that's what I'm going to say. Choose CFDs if, and choose futures if. Choose CFDs if you are a beginner or intermediate trader. So if you are just a beginner, start with CFDs. Please start with CFDs. Then choose futures if you have high capital and you are more experienced. Can you see I look now? Now you know what to do. You know exactly which one to choose. Choose CFDs if you are a beginner or an intermediate trader, or choose futures if you have high capital and you are more experienced. Number 2, if you want flexibility or low capital entry, then choose CFDs. But if you want institutional grade price feed or have high capital, then choose futures. All right. Again, if you want flexibility and have low capital entry, and then you choose CFDs. But if you have high capital and want institutional grade price feed, then you can choose futures. Number 3, if you are focused on Forex, retail trading via platforms like MetaTrader 5, then choose CFDs. If you are trading indices like Nasdaq, S&P 500, commodities like gold, then go with futures. And you have high capital, go with futures. Though you can still trade all those assets in CFDs, but if you have high capital and want to just focus strictly on those assets, then go for futures. The last one, if you are trading with prop firms or through brokers, CFDs through prop firm is the most popular. Almost 80% of all prop trading is done through CFDs. So if you are trading with prop firms or via brokers, then go with CFDs. But if you are building a scaling trading business, if you are building or if you are compounding, if you are a position or a swing trader, you won't see people like what was this guy? People like Carlos Slim, or this guy who broke the Bank of England. What was his name again? Who made almost about $1 billion in one day, shorting the Great Britain pound. He wasn't trading CFDs. He was trading futures at that particular point in time, because there was actually an expiry date for that particular asset. There was actually an expiry date for that particular currency pair. So if you are planning to scale a trading business into millions, into billions, and then you can go with futures. But if you are a retail trader, you want to get in and out, because with retail trading alone, there's almost about $6 trillion transaction every day. So if you want to just get in and out without planning to hold positions for years upon years, then the best you can go is CFDs. That's a full breakdown of CFDs versus future. Drop a comment. Which one are you trading right now? CFDs or futures? And if you are CFDs, are you planning to switch to futures? And if you are trading with futures, are you planning to try out CFDs after knowing the differences? Don't forget to subscribe to the channel check the link on the video description to sign up with Hola Prime. Remember, now if you go back to the website of Hola Prime, you can better make a decision. I already gave you guys the differences. Following what I just explained, Forex here stands for CFDs and futures is futures. So following my explanation and the differences based on the type of trader you are and your goals, you can either just click on Forex to go with CFDs or futures to trade with futures. So let me know in the comment section which one you are currently trading with or which one you're going to be choosing when you go to Hola Prime, and use the discount code on your screen and you're going to get up to 50% discount on your purchase with Hola Prime. Check the links on the video description to get funded with Hola Prime. Currently the #1 pro firm in USA. If you want me to mentor you one-on-one, show you step by step, because in Godlove University, we teach our students how to trade both futures and CFDs. Talking about myself, I trade both futures and CFDs. All right, so don't worry to say, oh, what about you? I trade both CFDs and futures, but CFDs for me is almost about 80%. I trade about 80% CFDs and just about 20% futures. Maybe I might scale in the future as I grow big and go into millions. Maybe I can scale more into futures, but for now, CFDs for me is 80% and futures trading is just about 20%. And just talking about the complexity of both futures and CFDs, futures is more complex because even if you trade with EAs, I almost forgot, if you trade with EAs like Petrex Pro, in CFDs you can easily use that EA to pass your challenge to get funded. But with futures, you need to convert that EA to maybe a Ninja Trader EA. It's very, very complex, all right? So for me, 80% CFDs and 20% futures. Get funded with Hola Prime. Hoping to see you guys on the leaderboard. If you want me to mentor you one-on-one, check the link on the video description to enroll in Godlove University, where I'm going to teach you step by step on how to trade both futures and CFDs. Also check the link on the video description to use my recommended brokers if you are planning to also trade CFDs through brokers. Join my free Telegram community, because you saw the trade I posted, my $150,000 swing trade. I'm going to keep updating you guys on Telegram, and I'm going to be taking other swing trades very soon. So make sure you join my free Telegram, so that when I'm taking those free swing trades, I also send the signal and you can take the same trades. Check these videos. If you didn't watch the first video I made, the first review I made about Hola Prime, then click this link to watch that particular video. Check this playlist, which is a series we are doing called TTP, Trading to Pay Out, and I'll see you guys on these other videos. Peace.